What is going on, traders? Welcome back to a brand new video. Celestin Capital here. Now, if you guys watched my support and resistance video, if you didn't, I highly suggest you go watch it. If you guys watched that part, I told you guys that I was going to come out with another video on price action. So I'm just trying to break apart the three steps to becoming a profitable trader. Number one, support and resistance. Number two, price action. And this is in no particular order. So we've got support and resistance, we've got price action, and we've got market structure. If you can become good at those three things, you can become a consistently profitable trader. Now, I'm going to make a video after I make the market structure video. I'm going to make a video with all three combined, me back testing all three combined. So I'm going to make a video back testing market structure plus support and resistance plus price action. And I'm going to show you guys trades that I take on back testing so that you guys have an idea on how to use them when you are live trading. So this particular video is going to be about price action. Now, before we hop into price action, it's important to understand what price action is. Now, what exactly is price action? Price action itself is basically the formation of price. So price, if you pay attention to price, every candle has a story. You know, we're trading in a multi-trillion-dollar market. I think at this point it's like $8 trillion a day that the market is moving. So the fact that there's $8 trillion in the market moving tells you that this is significant, right? Now, what I want you guys to understand is that there is a reason behind each candle. There's not $8 trillion moving in the market for no reason. There is a reason behind every candle that happens, right? There's a reason behind every candle that forms, whether it's on the daily, whether it's on the 10-minute, whether it's on the 5-minute, whether it's on the 30-second. There is a reason that every single candle forms. Now, let's understand what price action is. Price action, again, as I told you guys, is the formation of price. What is the candle trying to tell you? What is price trying to tell you at a certain level? Now, if you can understand support and resistance along with price action, that's great. Price action alone is great. Price action alone, as I told you guys, is great. Now, price action in a significant area is even greater. Price action in the middle of nowhere is, it's price action. Like there's that you can understand some things within price if it's in the middle of nowhere, but what makes price more significant, what makes price more valuable is when you look at price action within a certain area, like a level of support or a level of resistance, some kind of key level. Price in the middle of nowhere, we don't really care about, but if it's within some kind of zone, that's when price is even more significant. So let's take a look at a couple of price action patterns that are common in today's market. So number one, we have a head and shoulders pattern. So what is a head and shoulders? So if you look at the body of a person, you got this, you've got the head, and then you've got the neck, and then you've got the shoulders, right? You know, that which connects to the arm, you know, so forth, and whatever. It's the same with price. Sometimes you'll see price get to a level and form some kind of head and shoulders pattern. You'll see price probably wick above or candle close above, and then it closed below again. You'll see something like this. This is the head right here, and you've got the two shoulders right over here. So price, excuse me, price has faked out a lot of traders with this impulse to the upside. But once we look at it closely, we see price actually has broken down below this level of resistance or support and has formed a resistance on the other side. So we've got one shoulder on the left side, one shoulder on the right side. What we want to do is look at price action with the shoulder on the right side. If you see a head and shoulders potentially forming, what you want to do is look at price action on the right shoulder, all right? Because the chart moves from left to right. You read a book from left to right. So we want to look at price action from left to right. So look at this last right shoulder to determine price action with head and shoulders. Now, everything I'm telling you guys is the inverse, all right? So if I have this in particular is for selling momentum, if price is in a bearish state. Now, if price is in a bullish state, you just want to look at the opposite. You want to look at an inverse head and shoulder. Inverse head and shoulder, it's going to look like this, something like this. So you got price, which faked to the downside, broke above, and is holding this level of support right here. And what we want to do is look at price action on the right side again, right? So we'll look at price action right over here to see what price is trying to tell us, to see if price wants to continue to the upside. All right. There are a lot of candlestick patterns that you can look at. You can do your own research, but I'm just going to show you guys a couple right now. And then you've got a double top. So what happens is price gets to a level of resistance and forms some kind of double top, or some people call it M pattern, right? So what happens is we want to do the same thing as head and shoulders. We want to pay attention to price action at this second leg, at this second peak. You can call it peak, you can call it leg, you can call it whatever you want. But we want to look at price action at this second peak to determine if price wants to continue bearish momentum. Again, this is for sales. Now, if price is right over here, the reason I want to look at the first leg is because anything can happen over here. If price is over here and you're expecting sales, this is not enough confirmation. What we want to see is price reject, give some kind of rejection to determine whether price wants to go at a bearish state. So we want to see a second rejection potentially forming over here. One rejection is not enough. But if we get a second rejection, if we start to see price bearish bullishness slowing down and bearish pressure kicking in, then that is good indication that price wants to go down. Again, we are not trying to predict the market. We're just reacting to what the market tells us. If the market doesn't give us any bearish sentiment at this area, at the second leg, we just want to leave it alone. Even though price may tank from here, hey, we missed out on the move. It's all good. Now, what we want to do is focus on our plan, cultivate a plan for ourselves. Because at the end of the day, if you have a plan, you are prepared. If you have a plan, you will be prosperous. All right. Plan equals prosperity. All right. So keep that in your mind. If you have a plan to determine what price is doing over here, you expect price to give you some kind of setup and it doesn't give you the setup, you just want to leave it alone. Whether price goes in your direction or the fact that price could even continue to the upside, you want to stick to the plan. Regardless of the fact, you want to stick to the plan. If you miss a trade, you miss a trade. If it ended up going in your favor, it went in your favor. It is what it is. All right. So let's take a look at some live markets, or not live markets, but backtested markets, and see how we can read price action. Let's go take a look at, let's go on an hour time frame. I like the hour time frame. Let's see. Let's zoom into over here. As we see right here, this is actually a beautiful example. Let's take a look over here. What do we see? Price is at a level, right? Price is at a certain level of support. So this line right here is a key area. Price broke above the key area, right? Now price is starting to form some kind of support level right over here. So what do we want to pay attention to? What we see is this huge bearish candle. So let's start from the left side actually. What we see is this huge bearish candle right here. Then we get a bullish candle. So, price is pretty much indecisive right now because we get a bearish candle, we get a bullish candle. Then we see bearish momentum start to slow down a little bit, right? So we go from having this huge bearish candle to now price bearishness is starting to slow down. Now the candle is getting a lot smaller. You can see we even have a doji over here, right? And then we see some bullish pressure start to kick in. As you see, less bearish pressure is starting to happen. If you pay attention to the candles closely, less bearish candles are forming, and we've got more bullish candles forming. Besides this one bearish candle right here, we can see that price looks like it wants to go bullish, right? And then after this huge bearish candle, we get a bullish candle. And then what confirms is this Maribozu candle right over here. If you don't know what a Maribozu candle is a candle without a top or bottom wick, this is a perfect example of a Maribozu candle. In this case, we're looking for buy, so this candle is beautiful because it's a bullish candle, bullish Maribozu candle. It's a bullish Maribozu candle, and the fact that it's not in the middle of nowhere gives us a stronger indication that this is what we are looking for. The fact that it's happening at a key level and not in the middle of nowhere, this is a good indication that price wants to potentially, all right, potentially shift structure from bearishness to bullishness. And now if you actually got in on the close of this candle, you can see on the next candle, after this candle closed, price came, retested this area. You see this wick right here? Price retested the area and continued to the upside. So you could have actually gotten in on the close of this candle. You could have used the bottom of the candle, or you could have used this low right here as your stop loss. And you can see, called a nice 1 to 3 risk to reward ratio. And after that, price just absolutely tanked. So if we continue to the left, let's look for some stronger areas of support and resistance. As we get down here, we see that price broke below, broke above. With bullishness, with strong bullishness, price broke above, right? So take a pause at this video, pause the video and tell me what you see happening over here. And I'm going to explain. So we see that price impulsively break to the upside at this key level. Again, not in the middle of nowhere. We want these things to happen at a key level. Price impulsively breaks to the upside at this key level. And then what happens? We see bearishness start to form. But what happens? We see that the candles start to get smaller and smaller. We've got a huge, pretty decent sized bearish candle. Then we've got a smaller bearish candle. Then we've got a small bearish candle again. And then what happens? This huge bullish candle shoots above and breaks this structure high right here, the swing high right here. Now, what can we say? Price ultimately may want to go bullish, right? So then we see price continue to create bullishness. And then what happens? We see this hammer left behind. This huge, this nice, beautiful rejection, this hammer left behind. So a hammer is basically a candle. It's pretty self-explanatory. Candle. I can't draw a straight line. A candle. That's the best I can do. That looks like this. It can have a small wick to the top, but ultimately this is full and it's rejecting to one side. In this case, we have a bullish hammer. Even though it's a bearish candle, it's a bullish hammer because it's rejecting to the downside, meaning that price wants to continue up. So it's a bullish hammer. And then if you got in on the close of this hammer, your stop loss was below here. Look what happens. Beautiful. We target the structure high. We can see that this is beautiful. This was a better risk to reward than previous one. This is actually a 5-1 to almost 6 risk to reward. So again, I'm just trying to help you guys understand price action. Trying to help you guys understand price action. This is another beautiful example of a trade you could have gotten into. Another hammer over here with an even bigger rejection. If you got in on the close of this candle, you could have used that. Target the next high, which is this right here. And you would have gotten into this trade. You would have at least been break even. If not, you would have taken out some profits. If you would have pulled out some profits, you would have partialed, done whatever, taken out some money from the market. All right. That's the most important thing. Take some money from the market, right? So let's continue following price so you can understand the action of price itself. Actually, if you take a look here, there's something that I explained earlier. As I told you guys, head and shoulders, remember? Now, not every head and shoulder pattern is going to be this pretty. Not every head and shoulder is going to be this pretty. But if you take a look here, what do we see? We've got a nice head and shoulder at a key level right over here. Look how nice this is. Again, as I told you, not every head and shoulder is going to be pretty. So we've got the left shoulder over here, rejected this resistance, faked out some traders, faked out some buyers. And then we have the second shoulder over here. This is where we want to pay attention to price action, as I told you guys. If you want to get into this trade, if you wanted to get into this trade, you would have to pay attention right over here. Let me actually, so I can go down the lower time frame. Let me back test. Excuse me. Let me go back a little bit. Now, what do you see here? Drop down to the 45 minutes. We can. What is this? The 22nd of October. I don't know if we can drop down to 30 minutes. All right, we can. So beautiful, beautiful, beautiful. So if you look at this right here, if you look at price action over here, you can see the price actually gave us a double top as well. So not only is this a head and shoulder pattern, but this is a double top that price gave us over here. We see a lot of rejection candles to the upside. Then what happens? What happens is that price gives us this beautiful hammer over here. As I told you, beautiful hammer. So we have a couple of confluences over here. So we have a head and shoulder, one. We have a double top over here. So this right here is the double top that I was talking about. And then what? We have this beautiful hammer. So this trade you should have taken. Should have taken after the close of this hammer right here. So this would have been a beautiful trade. Target the next low, and then bam. You would have been out of this trade within an hour or two. Easy. Easy, easy, easy. And then price even continues if you wanted to hold this trade, you know. But we want to target the next low. This is a 1-to-3 risk to reward ratio. So I hope this video made sense for you guys. Price action is king. Price action is key. All right. And remember, we don't want price action at a random area. We want price action at a key level, at a key area. We want to pay attention to what the candles are telling us. If we are in a bearish state, what we want to see is we want to see bullish momentum start to slow down. So if we are looking for sales, what we want to see is the bullish candle start to get smaller and smaller and smaller, and then bearish pressure start to get bigger and bigger. You want to look for hammers, you want to look for dojis, you want to look for all of that, right? And opposite if you're looking for buys. If you're looking for bullishness, what you want to see is you want to see bearishness, the bearish candles start to get smaller and smaller and smaller, and eventually look for some kind of setup to the upside, like a hammer or something. So yeah, hope you guys enjoyed this video. Hope this made sense for you guys. If you guys have any questions, leave them down in the comments below, and I will answer each and every one of them. So I hope you guys enjoyed this video, and make sure you back test these. I tell you guys this every video. Make sure you back test these concepts. Don't just watch this video and then take these concepts into the live market. You want to back test them. You want to become confident with these concepts. You don't want to just watch one video and then go trade your live money, or go take a challenge with these concepts. All right. You want to back test them. You want to gain confidence. The way to gain confidence is through repeated repetition. All right. So make sure you back test these concepts before you take them into the live market, and then you can do as you please. Once you understand them, once you have gained confidence with them, then you can go ahead and trade on live account or trade on a funding challenge. So hope you guys enjoyed this. Make sure you take this and you practice this. See you guys in the next video.